Hello everyone. In today's session, we are dealing about purchase consideration on sale of partnership firm. The topic is Financial Accounting 3, Program Commerce, Semester 3, University Mangalore, Session 62. Recap of previous class. To make distinction between dissolution and sale of firm. Need for dissolution and sale of firm. Learning objectives to make them analyze the concept of purchase consideration and its calculation, to prepare the students for accounting during dissolution and sale of firm. Learning outcomes. Students are able to analyze the concepts related to dissolution of partnership firm. The students are able to prepare accounts on sale of firm. The topic in session 62 is purchase consideration. The purchase consideration is nothing but the amount payable by the purchasing company to the selling firm. So, in this slide, we are supposed to discuss the two major aspects. One is meaning of purchase consideration, and the second one is methods of calculating the purchase consideration. Now, let us analyze the meaning of purchase consideration. Purchase consideration is nothing but the amount which is payable by the purchasing company to the selling firm. Generally, it is paid in the form of shares, debentures, or cash as per the agreement between the partners and the purchasing company. Thus, purchase consideration is the amount payable by a purchasing company to the selling firm or vendor firm. The second aspect in this slide is methods of calculating the purchase consideration. Generally, there are two methods of calculating purchase consideration as mentioned in our syllabus. The first one is net asset method. In case of net asset method, the purchase consideration is calculated on the base of the net assets. And the term net assets means here the agreed value of assets taken over by the purchasing company. The term agreed value of net assets means here the assets minus depreciation if any or plus appreciation if any will be deducted or added in order to come for net assets. So likely all the assets as per the agreed value will be transferred in the first stage. In the next stage, the liabilities will be deducted in order to arrive the net assets. In case of liabilities, the agreed value of liabilities, that is, liabilities given in the book minus any additions or depreciations will be deducted. So the total value is agreed value. Thus, the agreed value of assets minus agreed value of liabilities is nothing but net assets. So to conclude the net asset method, here we can have a equation agreed value of assets taken over minus agreed value of liabilities. Here we can arrive with purchase consideration under the net asset method. The second one is total payments method. In this method, the problem never mentions about the calculation of the purchase consideration, but the lump sum amount paid by the purchasing company will be given in the problem. Such lump sum amount may be paid in the form of cash, debentures, or shares by the purchasing company to the selling firm. So therefore, there is no need to calculate purchase consideration. We can take what is given in the problem, the amount as purchase consideration. Let us analyze this purchase consideration calculation with a problem. Students, if you can refer the study materials attached to this topic. So I had given a problem. The problem reads like this way. A and B are partners sharing profit and losses in the ratio of 2:1. and their balance sheet as on 31st 3 2020 was as follows. Liabilities: creditors 20,000, bills payable 5,000, A's loan 10,000, A's capital 10,000, B's capital 15,000, reserve fund 3,000. Assets: cash in bank 150, bills receivable 2,500, debtors 30,000 less reserve for bad debts 1,500. The net amount is 28,500. Stock 21,850. Machinery 10,000. Total of the balance sheet is 63,000. They agreed to sell the business to XYZ company. The company took over the assets and liabilities as follows: machinery at rupees 8,000, stock rupees 19,500, debtors 25,350, bills receivable at rupees 2,500. Liabilities taken over: creditors 19,500, bills payable 4,000. Calculate the purchase consideration. So it is given in the study material. You can refer the study material. And if you go for the solution for the calculation of purchase consideration, here what we have to do, we have to take the agreed value of assets taken over as given in the adjustment and the liabilities. So if you go for the solution, the agreed value of assets taken over, the first is cash. So generally, in dissolution of firm or sale of a firm, it is assumed that when the cash given in the problem and nothing is mentioned, we can also assume that cash is also taken over or the bank balance is also taken over by the firm. Thus, the cash 150, bills receivable 2,500, debtors 25,350, stock 19,500, machinery 8,000. So total of the assets agreed value is 55,500 minus agreed value of liabilities taken over, creditors 19,500, bills payable 4,000. So the total value of liabilities taken over 23,500. So from agreed value of assets 55,500, if we deduct 23,500, the purchase consideration is 32,000. So under the net asset method, the purchase consideration is 32,000. Generally, the purchase consideration is calculated only in net asset method. But in case of lump sum payment method, there is no need to calculate the purchase consideration as it is clearly given in the problem. So that amount can be taken as purchase consideration. The second part in this aspect is normally the discharge of purchase consideration. So the discharge of purchase consideration is nothing but how the purchase consideration is settled between the purchasing company and the selling firm. So here sometimes may be given, it is given in the form of cash or cash and shares. So thereby we can distribute the available purchase consideration amount between the shares and cash. So that is what we call as discharge of purchase consideration. Thank you for hearing. Thank you.